I've long said that Bitcoin is an investment asset and it should go up with the overall economy. Now, I mostly stand behind that, but recently I want to kind of explain why that's not the case, because the stock market is obviously pretty much at an all-time high, and Bitcoin and especially altcoins have had trouble. Although it is an investment class asset, you have to remember that Bitcoin and crypto aren't really attached to their foundation, and they don't have things like earnings reports, PE ratios, and things like that. And you're saying, well, that shouldn't really matter. I don't really care about earnings reports and PE ratios and stuff like that. That's all good and great, except that's what drives a lot of the companies on the public market, and that does not drive Bitcoin. In fact, a lot of the things that companies do to actually boost up their earnings or boost up their profits to look good to investors are actually hurtful to the overall economy and, because of that, to crypto. Easy example of what I'm talking about. Look at Amazon. They just laid off a bunch of workers. Now, to Amazon stockholders, that's great. To Amazon workers, definitely not great. And what's even worse, they said they're going to replace them with AI, which means those jobs are not coming back. It's not like you can just deport a few immigrants and get those jobs back. That's not happening. They're being replaced with robots. Amazon specifically said that, and I don't think there's any legislation that prevents them from replacing those with automated robots. Now, that's great once again for Amazon profitability. Shareholders love that because it cuts Amazon's costs and of course it boosts profits. Now, there might be other issues like really bad tech support, or robots actually getting things wrong, and that could be a real big mess in of itself. But eventually, when a company makes that kind of decision, it's not really reversible, and they eventually get it right, and a lot of people are out of a job. Now, that's good for Amazon, I think bad for the overall economy, and very bad for crypto as well. So that's why they do go in opposite directions. It's obviously good for Amazon because it gets their investors excited. They're willing to buy more Amazon stock. They think that getting rid of all this labor will make profits go up, and they're probably right about that. So Amazon stock rises, and that, of course, with the rest of the tech sector, is going to carry like the Nasdaq, the Dow Jones, the S&P 500, yada yada yada. So the stock prices go up. But however, that means a lot of people are out of a job, and of course that means less economic activity. Because if you're out of a job, you obviously don't have any money to spend, so you can't pour that money that you would have earned back into society, back into the economy. Now, crypto depends on people actually having money to invest. And just because Amazon cut costs, it does not mean more money is coming into crypto, because that has nothing to do with crypto. Crypto doesn't really have products like that. It doesn't really have earnings to actually report. You can automate some things away with crypto, but that doesn't necessarily raise the price of the cryptocurrency because there are no so-called profits to actually report. And in fact, what keeps a lot of the crypto going is the fees being paid to the validators, so the validators will actually validate your coin. Maybe you can replace the validators with bots one day, and then we won't have to worry about, we really won't have to worry about the validators getting upset and leaving the network or not validating anymore if they don't get enough rewards. But that would cause other problems like who controls the bots and whether it's really decentralized or not. So it's never really going to be like these companies. Now, that's a big problem because these companies have a huge incentive to do things like cut workers and cut labor, and that's going to hurt crypto investments because yes, the laborers and the workers, some of them do actually buy crypto. You look at the ETFs from BlackRock and Fidelity, yes, they do buy their own ETFs, but a large portion of their ETF buys are from their retail customers. And if they don't have retail customers, they can't really buy as much on behalf of their retail customers. Remember, these ETF issuers are basically like reserves where their clients actually buy, and then they basically hold their clients' money. If their clients don't have money, then they're not going to be able to buy as much. When you're looking at, BlackRock selling 16 billion or something of crypto, it's not really BlackRock that's selling, it's their investors or clients is selling, and they have to sell the match. Same goes when they're buying. yes, like I said, BlackRock, Fidelity, they do own part of it themselves, but the vast majority of it is going to be their clients, both institutional and retail, both big and small, and that does have a big effect. Now, obviously, like when Amazon cuts jobs, that might get people excited for Amazon, maybe some related companies, because they can also cut jobs and boost profits. But for anything else that relies on investment, that's not good, because those people that Amazon cut, and many of them are highly paid workers, because Amazon employees, especially the developers, they actually get paid a lot. I don't really know about like the warehouse workers. I'm not really sure how much they get paid, but the developers get paid a lot. And if some of those if that money goes away, they no longer have a job. And the big problem is, like, if Amazon's doing it, you can bet a lot of other companies are doing it. So that class of jobs might actually just be obsolete after a while, and those people's skills essentially go out the window, and they have to find another line of work that may not pay as much. That hurts the economy. That basically hurts potential investors in crypto, because tech bros are the ones that are more likely to invest in crypto anyways. And realistically, crypto doesn't employ a lot of people. You can't just absorb all that talent that's been let go from Amazon and absorb it back into the crypto fold. That doesn't really work. So that's, I think, the main reason why the stock market has actually been going up and crypto hasn't, because the Dow Jones keeps making new all-time highs. So does the NASDAQ and the S&P 500. But they're mainly doing it because companies are really slashing workers, and slashing workers boosts their profit margin. But unfortunately, it does not boost crypto's profit margin, and it's actually bad for crypto, because those workers that just got slashed were probably being paid decently, and they had some money left over to invest. At least a lot of them do, and some of them were actually investing it in crypto. This is like an anti-stimulus. Like, last time, the government printed us a bunch of money, and a lot of people bought crypto, and that's technically, I think, like a lot of people say that's why we went up. This is like, Amazon's taking away the paycheck, so a lot of money that would have been coming into crypto is now no longer coming into crypto. And of course, people look at the unemployment rate, people look at people being laid off. The overall, average Joe's view on the economy is not dependent on how much profit the big corporations make. They look at people being laid off. They look at the unemployment rate going up. They look at the labor market shrinking and basically contracting, and it's harder to get a job. And they're like, well, we better save some of our money. So it's not only the people that are losing the jobs that are not investing, it's the people that are looking at the situation. They're like, well, we better save some money. We better not put it in crypto. Now, there's always going to be desperate people that are doing 100x leverage. Those people aren't going to change, because once you're addicted to gambling, you're kind of stuck. And unless you go for some therapy, and if you're addicted to 100x leverage, you should definitely go for some therapy. But that's another topic for another time. So, if you're not doing 100x leverage, you're doing spot buys, you should notice that, a lot of people might be holding back on their spot buys and maybe saving for a rainy day. And that does actually tend to compound a lot. If you do it, someone else sees you do it, they're going to do it too. And that means there's just less money coming into the market. Add to the fact that the rates are still high despite 50 basis point cuts. And Jerome Powell said he might not cut again later this year because he doesn't have stats. And the fact that the government's going to be shut down for a record time. Tomorrow is day 35, and that will tie the record from Trump's previous administration for government shutdowns. And it doesn't really look like there's any end in sight. It might go on for 50 days or more at this point. So that just builds on people's lack of confidence in the government and the market. And realistically, that's going to hurt the crypto investment market, because we're not really operating with things like, profit margin, P/E ratio, things like that. We're solely operating on the aspect of how much extra money do people have, and how much of that extra money are they willing to put into a risky asset. And as times get harder and harder, as more and more people get laid off, it doesn't matter that these tech companies are recording record profits and basically pulling the rest of Wall Street up with them. It only really matters what the average, what the average Joe sees. He sees things getting harder. He's not going to invest, and he's going to sell whatever cryptos he has. and put it in like a safe fund for his family or whatever, and you really can't blame him for doing that. And based on that, crypto is going to go down. So if you see like retail exiting crypto, even though companies are making record profits, that's why. It's not really manipulation. I mean, I guess you could call firing a bunch of workers manipulation, but that's really just Amazon trying to maximize profit. I don't really like agree with that strategy, and I think there should be like safeguards for, you know, like massive amounts of people getting fired. I don't think UBI is coming anytime soon for the United States, but like I do think there should be some like safety nets for people that just like completely get fired and, you know, their entire skill set is now no longer viable, being replaced by AI and whatnot. Structural unemployment is one of the worst types of unemployment, because then the skills that you've acquired over the years aren't really viable anymore, and you have to completely find a new line of work and get new training and stuff, and you might not be as good at your new job as you were in your old job. So there's a lot of people actually that are going to be dealing with that. So, you know, when the tech companies are going up, crypto could actually be suffering because that investor class doesn't have money anymore. Now, there's still plenty of people that have money, but like I said, they're going to see other people that are saving for a hard time, and they're going to be influenced to do it to doing it themselves. And that's just going to have a vicious cycle until people see things get better. And I'm not really sure when that's actually going to be. But if you're wondering why, you know, the tech companies are like reporting record profits and crypto is going down, that's why. Because the thing that they're doing to actually boost their profits is actually devastating to the economy, devastating to people, and not very good for crypto. So let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.